Well, good evening, traders. This is Jeff from Zen Trader, and I would be willing to bet that the big question on most traders' minds tonight is, has the market bottomed? And I don't see enough to think that this is a buying opportunity. But before I get to the NASDAQ, I want to go over the Toronto Stock Exchange because I saw something very interesting in the charts tonight. This is a daily three-line break, and as you can see, this is by definition a buy according to the three-line break rules. Any close above the three previous closes is a buy signal. Now, let me show you how I look at this chart. Essentially, in this period, this time frame between the beginning of the year and March, you had negative divergence going on down here with the MACD. Markets went higher, MACD went lower, and then you had this initial sell-off. Now, if you wanted to be a dip buyer, in my opinion, this is the time to be the dip buyer. We went to new highs. We sold off, and then most likely we're gonna, at the very minimum, head back to the previous highs. Now, during that time, when we did go back to these previous highs, the MACD had more negative divergence. So you've got like strike one here, strike two here, and then basically the market sold off again. And here's what we're seeing. We're all the way down here, and it's easy to look at and say, okay, we're down here. Over here, when the MACD went positive, that was a buying opportunity. It's not the same. It's not the same scenario, in my opinion. Here you have all this strength to get us here, and then you've got negative divergence all over the place. You've got it in the RSI. You actually have a channel, which we're just about to the top of. You've got two forms of negative divergence, in my opinion. Here, weakness when the markets went higher and the MACD went lower, and then more weakness when the MACD went still lower while the markets were rallying back to new highs. When you kick this down into a 60-minute chart, something even more interesting, in my opinion, is beginning to formulate. Basically, what I did was I took I don't even know what you want to call these, but it's a tool in stock charts where you drag it and it forms all these lines. And what it's doing is it's showing you how there's a pattern here where you had this high, and so basically I extended it out, and it matched right up with this low, with this. When I say match up, I mean we're talking like a day. With this high, with this low, and now we are approaching an area where tomorrow we could potentially tag this upper trend line, this downtrending trend line, and it's going to be right around this time where over the last since April, there's been a very clear pattern of once we hit this upper trend line, once a certain amount of time has passed, the market reverses. So when you go back and you look at this, what I would be looking for is a red bar going down. A red bar going down with, like, for instance, the MACD turning lower and then the RSI getting rejected off of this trend line. So that's kind of what I'm looking for in the Toronto Stock Exchange. I think that this is a time to not be long and to be looking for. So essentially, if you were short coming down here, what you would have done is when you got this white candle, you would have gone to cash. You would have covered your shorts, taken your profits, and then sat and waited for the next short selling opportunity. And I think that's where we're at. And I think that this weakness that we're seeing in Canada, it's not that it's going to spill over and cause the U.S. to fall, but I think it's a symptom of what we're seeing in the U.S. markets. So with that, look for a sell shorting opportunity in the Toronto.